Hello, and welcome to In The DeNovo. I'm Will Grace, founder and managing director here at DeNovo Treasury, where we empower leaders of community financial institutions entering commercial and industrial banking with expertise for their strategic investment in treasury management products and services. We prioritize the how over the what. We believe in a collaborative journey and go beyond traditional services by actively transferring treasury management expertise to our clients. Thank you for joining us and staying in the know with In The DeNovo.
So, common use cases for embedded banking. Can you share some of those with us?
Yeah, so I'll start with the one that I think we've all talked about in the past. It's like, hey, how do you get the guy who cuts your lawn to have an application that he can use that's actually completely embedded with his financial institution? So they can send a request for payment or invoice and then be able to get paid on it, right? So,
Yeah.
kind of that Intuit Lite, if you want, or the QuickBooks Lite application. There's a lot of financial technology firms out there doing things like that for industry verticals. And their challenge is how do they actually do the payments processing piece? In many cases, right now, without embedded banking, it's happening outside of that financial institution, usually through a PayPal or a Venmo or potentially a Square. And then at some point, the customer has to move their money from one of those platforms into the financial institution platform so they can do other things like pay bills or pay off a loan that they might have.
Mm.
And when that happens, you have this disparity of both information and data that the financial institution doesn't really know the customer's position, and then the fintech potentially doesn't know the financial institution's information that they have, right? So as you think about, like, one of the most common pieces would be how do you fully integrate that against the bank stack so that you're actually having the bank process those transactions on behalf of that fintech for that customer, and at the same time, you're actually having those balances stay within the financial institution. And then also some of that data sharing so that both can see the growth metrics of that potential customer and how to help them out next. But I would say, like, the most classic way to look at it, that's probably the one that we talk about all the time because it's a big problem for the industry to solve for, is how do we actually service a lot of those SMB plus customers? On the middle market side, though, it's simply about how do you actually integrate against their accounting platform. So many times today, we teach our customers to have to do payments, which means that they're cutting a file out of their system in the back of Dynamics and they're sending it to their financial institution through an SFTP overnight to be able to have some of those things processed. Well, when you think about why we built RTP and why instant payments exist with FedNow in the US, it was really about upgrading the technology stack. And you can't achieve that if you keep everything batched up. You have to start to look at these things as more single-threaded transactions, whether they go through an ACH platform, which majority of them will still do because of the cost differential, or whether they go through an RTP or FedNow platform. So being able to now apply those technology capabilities directly in from a financial institution to allow for when somebody's in their accounting platform and they need to send a payment out, they can go directly into the customer's financial institution, and then it gets scrutinized there before it goes out the door. Reduces, in my opinion, a lot of fraud and risk across the transaction basis, but also smooths out the work that a corporate needs to do during the day. In many cases, they have to take breaks during their day when they get files in to do a whole bunch of processing. Whereas if you're looking at this from a single threaded solution perspective, where every transaction is its own transaction, not only do you have better accounting in the back end, but you also have a much better capability to smooth out the type of work that has to happen and have it happen when it needs to happen, as opposed to batch and deferral processes later on.
Thanks for tuning into this episode of In The DeNovo. For more content like the video we shared today, check out our website at denovotreasury.com and our YouTube channel at DeNovo Treasury. Thanks, and see you next time.